Time now for Options Insight. I'm Abigail D. Little. Joining me today from the SIBO in Chicago is Alan Nuckman of Agora Financial. Alan, happy Monday to you. And with it, we're looking at some interesting trading action. The S&P 500 on pace for its worst day in almost 2 months. And yet we still don't have a greater than 1% move. We're in this streak of very small moves. So is this healthy consolidation or the start of something bigger to the downside?
Well, I would view this right now as a little bit of a profit-taking pullback. Let's remember, we're only 2 sessions away from all-time forever highs. So you're seeing people maybe cash in some of the profits they've seen over the last few weeks. But I am a bit cautious because last week when the market made new highs, the VIX did not make new relative lows or new 2019 lows. So you're seeing a bit of a pause right now. Let's see what happens next with the VIX. They've been trading between 12 and 14. It's a little bit above that right now, but 12 to 14 for the last month plus, and now it's shifted and pushed to the upside.
And somewhat quickly, let's bring the skew index into that conversation because the VIX reacting today, but the skew index has been elevated for weeks. That's the quote-unquote panic index. Does that make you even more nervous?
Right. Well, nervous is not the word I want to use. I want to use the word cautious because every time we've seen the VIX elevate at all, it gets slapped back down in the next few sessions or the next week or so. So it's important to see it go back inside that trading range between 12 and 14. It did break below that last week, and it was down at the 11 handle. So, you know, it does target 10 on the next downside move. The overall trend is still down in the VIX and up in stocks, and it's been that way for a long, long time.
Well, I certainly like your distinction between cautious and bearish. And talking about your trade, 10-cent music, pretty bullish.
Yeah, it's a technical trade. Now, this is a stock that's down 25% in the last 6 months. It's down 40% from its highs. It's traded here from 12 to 19. It's back at the $12 level. So this is a super support level for the year. The stock substitution strategy is what I'm looking to do with an option here, buying an in-the-money call option. Again, the low is 12. I'm looking at a July 10 call, trading for about $300. It's $250 in the money. It's got 6 months of time and a high 80 delta, so it's going to act like the stock. Now, if we can get back to the halfway point in this drop, then this option will nearly double in value.
Interesting trading strategy. Alan Nuckman of Agora Financial with the possibility for very big upside. Thank you for joining us for Options Insight. And from New York, this is Bloomberg.
Today's Options Insight is sponsored by Think or Swim by TD Ameritrade.